please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, so we done 37 points. When we started at 11, we had a 30-point cut, so it's a few points here and there. Not very much has changed. Bank Nifty is down 0.5%, 140 points lower. Let's look at what's happening in commodities. Manisha is here, and she's going to run us through mostly oil today.
Crude oil prices, yes, Prashant, because the last couple of weeks we've seen declines in that space, and this week we seem to be headed for a weekly gain, and the reasons are quite a few. One is, of course, that Venezuela is struggling to get 24 million barrels of oil to its customers, so that decline in supply has added premium back to prices. And then, of course, apart from that, there has been a statement from the Algeria oil minister saying that the OPEC will want to continue to try to balance the global oil markets and not necessarily increase supplies. So that is where we have seen support coming from. But you must take a look at the Brent and the US crude oil prices, where the gap is now widened to an $11, which is the steepest since 2015. So one side, of course, you have those supply concerns, geopolitical tensions, etc., which is keeping the Brent prices higher. But on the other side, you have the US crude oil prices, where the production, exports and inventories are holding at around record highs. How does the next week now look at, and what are the factors to watch out for? For that, let's go across to Vandana Hari, who now joins us on a phone line. Vandana, hi, pleasure to have you. And this week actually has seen a bit of a comeback in case of the crude oil prices. As we see, or as we get into the run-up to the 22nd June meeting, what are your expectations on what all will the crude oil prices watch out for?
Hi, Manisha. We have seen a lot of volatility this week, and I assume this sort of pattern will remain in place until OPEC lifts suspense, if you will, on the market right now, which is will it or will it not increase supplies by the 1 million barrels per day. As you said, this week the market sentiment has swung between, of course, bearishness, which due to the expected supply increase, or and bullishness because of Iran and Venezuela. And there were a few headlines this week which both of which increased the concerns around Venezuelan and Iranian supplies. And this tug of war, I don't see it ending until OPEC makes it clearer as to what it's going to do with its supply. And increasingly, you see the ministers have started. It's become a very sensitive issue within the organization, and the ministers, I expect them to play their cards very close to their chest until June 22. So basically, it's going to leave the market hanging in suspense.
Clearly, there seems to be a discord building up in the OPEC members ahead of that meeting. But how do you read the $11, gap that we are looking at both of these crude varieties? I mean, I was talking to some other people globally, and they said this gap actually could widen going forward.
Yeah, so this spread that has been widening, more than $11 discount for WTI at Thursday's market settle, is partly related to the question of what OPEC is going to do and the supply tightness, and partly it is not. The part that is related to OPEC's decision and the supply tightness, growing supply tightness on the globe in the world, is that Brent, and we've seen this since the start of 2017, Brent always receives a disproportionately higher lift, a boost in sentiment from any supply disruptions or cutbacks globally. So when we look at the OPEC, non-OPEC cuts, they lifted Brent much more.
Sure.
So when you look at the fears over Venezuelan and Iranian declines, they will disproportionately lift Brent more. WTI remains a little bit disconnected from the rest of the world, even though U.S. crude exports have been growing. There's severe bottlenecks within the Permian, as well as in terms of exporting from the U.S. So the part that's not related to the current supply tightness is the growing U.S. production. And basically that colliding with infrastructure bottlenecks. So we have pressure pulls and from both sides, Brent being lifted more and WTI coming under pressure because of U.S. production and infrastructure.
So finally, what is your sense on the crude oil prices going forward from here? Sure, volatility is going to be a part of it, but is this going to be a range-bound thing now for at least next couple of weeks?
We have seen about a $4 difference. I was just looking at how the volatility has played out, and I'm looking at Brent because I think we should keep WTI aside because of the factors I mentioned before. So about $4 difference swings in Brent prices between market sentiment veering between yes, there will be an increase, or no, there won't be an increase, or not enough of an increase to counter Venezuela, Iran, and other problems. And that difference has been about $4. Okay. That does not fully, I don't think it fully prices in. So if we do see an increase of 1 million barrels per day, I would expect another pullback by, let's say, about another $4. So essentially, then the difference I see is between Brent at 79, if things remain the same, and Brent at low 70s if OPEC does increase. Yeah, so about an $8 difference, I would say.
All right, Vandana, we'll let you go at that. Thank you so much for joining us. So that clearly is an $8 of a range that we might see in case of the crude oil prices going forward until that 22nd June meeting.
Okay, all right, Manisha, thanks very much for bringing us that perspective on Brent crude. Well, for the markets, 10,738 is what is holding on the Nifty. Ashwini Gujral joins in to discuss the technicals of the market now. Ashwini, hi. It seems as though pharmaceutical stocks are seeing a very good pullback today. What would you recommend on that?
See, basically, there's a pullback rally, and the biggest pullbacks happen where the shorts are maximum. So maybe, early morning for a couple of hours, there was opportunity. But overall market, the bulls are trying to get the Nifty back above yesterday's high, but they aren't really making any. Morning for a couple of hours, there was opportunity. But overall market, the bulls are trying to get the Nifty back above yesterday's high, but they aren't really making any sort of headway. So my trade is, getting short on Bank Nifty here. This, pharma rally will soon peter out. I don't think there's great value in trying to buy pharma. Today CG Power is up 6%. So maybe that can be used to play some short covering. That is a buy with a stop of 60, target of 64. Other than that, a lot of other stocks are selling off, and particularly large caps. So Larsen is a sell with a stop of 1355, target of 1300. ITC is a sell with a stop of 273, target of 260. So overall negative on the market, and the mid cap short covering is probably keeping it afloat. Once that ends, I think we should see a fairly strong downside for the rate sensitives and the Nifty in general. IT pharma may not fall as much, but I don't think they have great amounts of upside.
What about like a global sector like steel, Ashwini?
Steel is also sort of a momentum play. The way this is setting up, within like 1.5 sessions, the pullback is over. It just shows you how much pressure there is on the downside. So a mistake would be trying to buy into strong spaces and finding even them getting into a decline. Today, if you see, HDFC is down, HDFC Bank is down, RIL was down most of the day, Dabur, ITC, Larsen. So many big stocks are down that it appears that the basic direction of the market remains on the downside. So you will get value unless you are a long-term investor in trying to remain on the negative side of the market.
Okay, well, let's get in some Twitter queries now, Ashwini. Karthik wants to know if Biocon is a good buy at current price levels.
Like I told you that overall, I don't think pharma is really bottomed out. Now what happens is that if you buy even a good stock in a bad sector, quote unquote, chances are sometimes it does not work out because of the company it has. So it's much better to buy into consumer stocks like VIP Industries or Bajaj Finance, Bajaj Finserv. At least, if nothing else, the downside will be very low. If you must buy Biocon, I think wait for some accident, and maybe 500, 520 is a good level for an investor to buy.
Okay, all right, Ashwini, we'll take a break on that note. Thanks very much for joining in with all of your calls on the technicals of the market. We'll take a break, but up next we're going to be discussing the yields. The 10-year Indian benchmark yield has hit 8% on an intraday basis today. So Vivek Rajpal of Nomura will be joining in to discuss. Well, let's shift focus away from equities. The other big asset class to track right now is what's happening with the 10-year benchmark yield, which has hit 8% on an intraday basis. Remember that the yields hardened post the RBI policy as well. Now it's off that 8% intraday level that it had hit, currently at around 7.95. Vivek Rajpal of Nomura joins in to discuss this. Vivek, hi, thank you very much for joining in. So, what do you make of an 8% in yield for us, and how much more do you think it can harden?
Well, to be frank, 8% is just a number. I mean, we have been hovering around 780, 790 zone for some time now. And Reserve Bank of India provided, the hike from Reserve Bank of India provided the final push towards 8%. I think bonds in the longer end of the curve will remain under pressure. Reason is it's just not a hiking cycle. I mean, to a certain extent, a lot is in the price, but it's more about the supply and demand in Indian bond markets, which is weighing on bonds. So, I mean, I think bonds will remain under pressure, mainly in the longer end of the curve. So
can you give us a target, maybe say 3 months down the line, where do you expect the yield to be, and even by year end?
So our forecast is that yields will gradually move higher. We'll likely, I mean, we are trading below 8, but probably we'll trade in a range of 790 to 810 for next 3 months or so, and then finally move towards 820, 25 kind of a zone.
Oh, and what is factored in, you think, in the 10-year right now, and what do you think the market will react to for it to go to 8.20, 8.25?
I think, I mean, of course, it's not going in a hurry, but I mean, why yields should move high? I think as we move towards second half of the fiscal year, there will be some uncertainty on the fiscal front. Number one, we are in a monetary tightening cycle. We have just got one hike. Though this may well be a very shallow hiking cycle, but in India, even shallow hiking cycle is equivalent to like 3 or 4 hikes. So let me put it this way: a combination of supply pressure and hiking cycle is likely to push yields higher. But Ekta, as I said earlier, I mean, though it's 8% is a psychological level, if you really think about it, I'm just talking about another move higher of 20-25 basis point versus more than 100 basis point move that we have seen last year.
That's true. But it's an important psychological level also for the 10-year yield to cross 8% this year. And that too only around 3 months into or 4 months into the FY19 fiscal. But Vivek, I wanted your thoughts in terms of how many rate hikes has the 10-year factored in, and the absolute amount of it as well?
If you ask me, bond markets are actually pricing in 75 to 100 basis point of a hikes already.
Incremental from here or inclusive?
No, total.
Total, okay.
Yeah, so it's reasonable to expect the spread between 10-year bond yield and repo rate to rise at the beginning of the tightening cycle. But as we reach towards the end of the tightening cycle, typically the spread between 10-year bond yield and repo rate compresses. I don't think market will trade with a view that we are towards the end of tightening cycle, because all the data, whether you look at inflation or you look at the activity data, is still on the rise. But I think markets will tell us probably at some point of time that we are towards the end of tightening cycle, and then we can start the compression. But I think we are still far away from that kind of a stage.
Okay, all right, Vivek. We'll let you go on that note. Thanks very much for joining in and speaking with us. So that's on the 10-year. For the equity markets, the Nifty is down 0.4% and the Bank Nifty pressured down around 0.6%. Take a break. But up next, Warren Buffett has urged American companies to end quarterly guidance. We'll discuss if this should in fact be followed by Indian companies with Mr. Damodaran, the former chairman of SEBI, and Anil Singhvi of ICANN Investment Advisors on the other end of this break.
Welcome back. The market's right there, no great change. We are now going to focus on an important issue which doesn't necessarily concern the market here and now, but nevertheless is important and sort of flows through pretty much everything that you see in the market every day. Which is essentially quarterly forecasts, companies giving annual and quarterly forecasts about what they will do in terms of profits, revenues, etc. Yesterday, we had legendary investor Warren Buffett and JP Morgan CEO Jamie Dimon coming together on our sister network, CNBC US, to make a plea to corporate America that companies should actually stop announcing quarterly profit forecasts, saying that this encourages short-termism and doesn't help anyone, particularly shareholders. Should India Inc. be listening? That's the question. Mr. N. Damodaran is joining in. He's needs no introduction. And he's, of course, former chairman of SEBI, runs his own firm now. Mr. Anil Singhvi is chairman at ICANN Investment Advisors. Gentlemen, both of you, thanks very much for being here on CNBC TV18. Mr. Damodaran, first to you. What would you make of the plea made by Mr. Buffett and Jamie Dimon yesterday? And how would you sort of think about that in the Indian context?
Prashant, this is not anything new, except the fact that it's coming from Warren Buffett, therefore everybody's sitting up and taking notice. If I recall right, 11 years ago, not yesterday, not the day before, I said that guidance should be discontinued. The earlier it is done, the better. Because we have a very odd situation when the law says you cannot make forward-looking statements, and yet in the name of guidance you can say anything you like. When does it become a forward-looking statement? Nobody is addressing that question. More than 11 years ago, I said we should not just do away with quarterly forecasts and annual forecasts. We should, in fact, if we have the courage, it needs a lot of courage, revisit quarterly accounts itself. Because quarterly accounts are meaningless for some companies, like, for example, infrastructure. What really can happen in a quarter when all your projects are going to take several years to complete? The quarterly, the numbers, the guidance, these are all addressing one set of stakeholders, namely analysts. I don't think it contributes significantly to institutional investors' interest also. It's just analysts who are benefiting the most because television, especially being a hungry medium, needs a lot of material to keep it going, and this is as good as any. But it serves no purpose, and the earlier it is discontinued, the better. Also, what it means, both quarterly numbers as well as quarterly forecasts, is that you have financial engineering, which is that you're playing with quarterly accounts so that your forecasts come right, and you've had companies meeting estimates several quarters, several years, quarter after quarter, which raises eyebrows. I think the earlier we discontinue all of this, the better.
Fair enough. Mr. Singhvi, your first thoughts, sir? I mean, what has been said in the US by Mr. Buffett, and okay, I think we'll have Mr. Singhvi joining us in just a bit. Mr. Damodaran, some would say that it does provide a way for shareholders, I'm saying common shareholders, it gives some idea about future prospects, etc. I mean, not a quarterly, maybe a broad annual guidance. Otherwise, some have argued that common retail shareholders are pretty much powerful. Top analysts get a lot of information which retail shareholders don't have. Investors can do the same, but for common shareholders, publicly announced guidance is one of the very few things which is shared equally between everyone.
I think we live in very optimistic times if we believe that the average retail shareholder is taking note of guidance issued by companies. He or she is more interested in the actual numbers of the here and now and what it means in terms of the share prices on that day after having written out checks and hoping that companies will deliver. I don't think the retail investor is the one that really looks at guidance, relates it to what is happening now and what is likely to go forward. The real issue with this is it does promote short-termism. The minute you put out numbers, then you're doing things to hit those numbers. You can't afford to have a bad quarter, because then a bunch of commentators will come down on you. And you don't want that to happen. Therefore, you keep, for want of a better word, let me say, adjusting the quarterly numbers. If your quarter is very good and it's going to overshoot numbers significantly, you're worried about the next quarter. You see how I can take some of this in the next quarter rather than accounting for it now. All this fun and games, I don't think benefits investors.
Okay.
I think also, if we think this addresses information asymmetry, it does not. The better way is to see that you don't get unnecessary information going to people who today are getting unnecessary information. And then creating an information asymmetry and seeking to address it by terms of guidance and all of this is innovating.
Okay. Mr. Damodaran, I take your point on guidance because, sometimes that can become a tricky issue in terms of achieving those numbers. But to get a status check for shareholders, even for what the industry dynamics are looking like, what the pipeline would be looking like, isn't that fair? Isn't that something that investors should be privy to in terms of investments that they have in a particular stock?
Then why have quarterly numbers? Somebody said once when I put out something like this for comments and invited comments, we had the head of a stock exchange who said, no, we should have actually daily accounts and daily guidance. Then next we will have hourly guidance in the name of investors. No, I assure you, investors are not the ones, the ordinary investor is not the one who's looking at guidance, looking at industry things. Maybe the informed investors sitting in Mumbai or Ahmedabad or Rajkot might be doing it. I don't think...
But how would, say for example, you're talking about a PSU bank or a bank's P&L in this case, where the gross NPA you start off in Q1 is at 4%, but at the end of the year it spikes to 8%. But there's no way of knowing that if there are no quarterly numbers reported. Do you think that would be a fair assessment, and it would probably result in shock as well? Or maybe even more volatility in stock prices?
It's interesting you gave the public sector banks example. How many quarters have we heard? How many public sector bank chiefs saying the worst is over? We've seen the worst. What have been the numbers in the next quarter? Has that sentence stood up for scrutiny thereafter? So it is better to give no information than information which gives false comfort. I would rather give no information. At one end, you have statements that give false comfort because you want to say, I put it behind me. Now, hereafter life is going to look good and hope the investor will buy into that. Then you have a bunch of guys who are actually dealing with actual numbers in order to meet the guidance. So guidance becomes the master, the performance becomes the servant, the performance gets adjusted to meet the guidance. Who's benefiting in the process?
Right. Mr. Damodaran, you began the conversation by saying that the law states that it sort of clearly says you cannot give out material information, right? I mean, but the practice of guidance... No forward-looking, sorry. Yes, no forward-looking guidance.
Yes. Yeah.
So what is the grey area then, really? I mean, if it clearly says...
That's what I want to know. Is there a line at all between what constitutes forward-looking statement and what is guidance? See, you must look to the history of guidance. When did it all start? It started in the United States, and it started with companies like IT companies. Even today, who are the people who are sticking to statements? Or you take a large IT company in India, which was in the forefront of this and which put out guidance. And suddenly, when the numbers went bad, I think a couple of years ago, one quarter was bad, it decided, no, we will not give quarterly guidance.
Right.
So when numbers go bad, you don't want to give guidance.
Sure.
Numbers are all right. It's a great thing to give guidance. So who's benefiting?
Sure. Mr. Damodaran, so just to come back to the point of the law, you said you want to know, but I mean, you were at the helm of SEBI, so you surely gave this a close look. So where is the discrepancy? Because even at that point, there used to be guidance coming out from companies. So if the law states you cannot give out forward guidance, I mean, what is stopping from regulators to come down on this?
Nothing is stopping regulators, but you see, I was the chairman of SEBI for 3 years, but I was not SEBI. It's not the chairman wakes up and
sure.
You have to carry others with you. You have to carry people outside of SEBI with you. This has to be an informed, consultative debate which leads to an outcome that benefits everyone. So clearly, many people thought it was not time in order to go back on this. Guidance had started. Many people believe that, some even now do, that it's a great thing for investors. So I won't quite say that my voice was the minority voice, but certainly it was not a sufficiently persuasive voice to put this through. Yes.
Mr. Damodaran, just one quick last question from me. Do you think India is in a position to adopt this? The reason I ask is just the recent examples of what's happened with auditors, where they've been uncomfortable and they've probably resigned for various unknown reasons at this point, or known reasons. So taking that into consideration, maybe the corporate governance standards not being optimum when it comes to Indian industry or certain mid-caps in question, do you think that we are ready at this position to not declare quarterly numbers with no audit reports?
We are absolutely ready. And auditor resignation is a much bigger subject. Auditors, when they resign, should be asked tough questions. If you're saying you didn't get information from the management, did you seek the information in your interaction with the audit committee minus the management element? Because you have the right to have a meeting with the audit committee without any management element being present. Did you tell them you were not getting the numbers? Did you tell them it was not coming on time? That is actually what gets discussed in those interactions between audit committees and statutory auditors, whether information flow is right. In fact, one of the things on which board evaluation is to be done, if you see Schedule 4 of the Companies Act, is the nature and the timeliness of information flow. Directors are responsible for it. So if auditors are saying we didn't get it and we'll pack up and leave, you should have dug in and said, okay, you have the right to qualify if you want.
Sure.
You have the right to have emphasis of matter, much as I dislike emphasis of matter. I think either it's a clean statement or it's a qualified statement. I'm not in fond of halfway also. But the real issue is not that it is not that these quarterly guidance numbers is increasing governance or improving governance. Governance is not a function of putting out guidance that a few people read and act upon. To my mind, in the worst cases, it actually increases information asymmetry. When you look at the people at the people that don't look at this guidance or don't have access to it because they don't follow the markets regularly, and you look at those that get it on a continuing basis. Your question is India ready? India was ready long ago. The earlier we do it, the better.
Mr. Damodaran, very clear thoughts on the matter. Thank you very much for taking out the time today and talking about this important issue. I think Mr. Damodaran wrapped it up beautifully. He said in many cases the guidance becomes the master and the actual result actually becomes a servant to what's actually been put there by companies saying we'll do this or we'll do that. I think we're completely out of time. So from Ekta, me, everyone on the team, thank you very much for staying with us on Trading Hour. Stay tuned. There is more programming which comes right up in 2 minutes. Halftime report follows.